Okay, hi everybody, welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. I'm just hopping back on here to give you another weekly update, just to update you on some of the price action that occurred on the S&P 500 this past week, and then as well as give you an update on my position using our True Alpha Trading system, which again is what my entire portfolio is allocated to here. I don't have other positions or individual stocks or anything like that mixed into the account that I'm trading here. This is entirely S&P 500 products using, again, our True Alpha Trading system. So this is to give you, again, just the chance to look over my shoulder and watch how I'm implementing this system, watch how I'm positioning myself, and then how I'm managing risk over the course of a month to put together a strategy here month over month over month that is more dynamic than just passively investing against the major indexes here. So again, this is just to give you an example of how to use this. So why is that helpful? Well, if you're considering purchasing this course and utilizing this strategy, this gives you a chance to somewhat test drive the strategy, at least see enough of it so that you can gain confidence and see how I'm implementing it before you purchase the course. And then this is also just one more tool among our whole suite of online tools that also you get access to when you implement this system. And you'll see one of those here in just a second whenever I show you my position. But this is just one more tool to help you learn this system. So not only will you get the course, not only will you learn the strategy from the course itself and get access to tools that are going to help you implement this, but this also gives you, our weekly updates give you the chance to look over my shoulder to see how I'm utilizing it, again, how I'm managing risk with it. And all of that is just to help you learn how to do all this as efficiently as possible. So let's go ahead and jump into this. Today is July 11th. And yesterday, the market closed right at 76.26 on the S&P 500 futures. So I'm going to zoom in here and just show you this past week's move. So the yellow line here that's really kind of cutting into the middle of this candle here is actually the close from the Friday prior to last week. Again, Monday of this past week coincided with a holiday weekend, so you have kind of this wonky candle where my line is kind of cutting right through the middle of it, and that's because that's indicating actually where the futures closed on the Friday before last. That Friday was there was a half a day's trade on the futures, and so I'm positioned against the S&P 500 by means of the S&P 500 futures. At least part of my position is. And so I highlight that because as far as although the equity markets were closed, you did get half a day's worth of trade on the futures on that Friday. So I have that indicated here. We actually closed on that Friday at 75.52.75 on the S&P 500 futures. So from where we closed Friday before last to where we closed this past Friday at 76.26, that was a move higher over the course of last week to the tune of about 0.97%. So almost a 1% move higher over the course of this past week. On a month-to-date basis, that's going to be indicated by the blue line here. So from where we closed at the end of June last month to where we are today, or as of this past Friday, you're looking at a month-to-date move of about 1.11% higher on the S&P 500 futures here. So just slightly more than what we saw on a week-to-date basis. And then if I zoom out here real quickly, I'll just update you that, this candle here is highlighting where we closed at the end of last year. And so on a year-to-date basis, you're looking at we're very close here to being back at all-time highs. And so you're looking at a year-to-date move to the tune of about 10.62% higher on a year-to-date basis. So in my position, what you'll see is when I recap my portfolio month to month, which I did, and that's posted on our website. But I'll update you, and if you follow those updates, my recap for where we ended off this past month to where we are today, I've actually captured all of this move higher inside of the S&P 500 because of the way that I'm positioned here. And so I'll get into showing you that. But again, I'll just reiterate that I don't use fundamentals. I don't use technicals. I don't trade around news headlines. I don't trade earnings. I don't follow too much macro data. So I don't use any of those things to make my decisions and manage risk. What I have completely adopted is basing my position, the way that I position my whole portfolio here, and then the way that I manage my risk is entirely based on price extremes. And if you watch enough of this, you'll see what I mean by that. But the to me, that's just simpler. It's I don't feel like I'm having to guess as much or trying to guess as much. It's not a speculative approach to trading or investing. It's totally positioning myself around price extremes, uh, and then managing my risk based on the price action that we get. So it's somewhat of more of a reactive approach. Once I've positioned myself over a range of price extremes, from there, it's more of a reactive approach of just managing my risk to optimize that distribution of risk and reward that comes with how I'm positioned. So let's jump over now and just give you an update on my position, what that looks like. So I'll just pull it up for you here. Again, at the top here, as indicated, this is our spin calculator. So the cool thing about this tool is whenever you're working over here on the actual spin calculator side, if I just go there, all of the information that's tied into this tool actually syncs with your personal Schwab account. We don't get access to any of your personal information. We don't want access to any of your personal information. But our connection, the way that we sync with your Schwab account, is that we actually just have you connect to your Schwab account. And then this app, once you've logged in here, will start pulling your personal real-time data from your live trading account. And that's only so that the tool here updates and calculates everything for you automatically. So you can focus more on position and how you want to position yourself. And then from there, how you want to manage risk, more than having to focus on any of the technical calculations that go into any of this. So it's really an awesome tool, makes this a very efficient, more visual process of positioning yourself and managing risk month to month. So a great tool here. Once you've gone in and you've placed your position, where I'm going is our put position tab, which just gives you a chance to kind of put that same position in here, but it locks it in so that there's not any real-time data updating it and changing it on you. So it's a way of just creating a static view of your position here so that now you can watch it over the course of the month, and you can actually then come in here and do, log any adjustments that you might make to it, that in order to optimize, that distribution of risk and reward that you're going to see here. So again, I'll just highlight here that at the top is the original position that I placed at the end of June. And so I have my core position that's highlighted here, which is really the main driver of the distribution of risk and reward that you're going to see in here. It's definitely the main driver of the risk that I'm taking on in this position. And the way that I look at this, and you'll see in our course, we teach you a few different structures, the way to utilize this to structure your initial position. And just because we're sitting at all-time highs, I've, for a number of months here, pretty much gone with one of those positions that we teach you. And you'll see the structure of that here in just a little bit. But what that includes is a hedge to my position, as indicated here. And then I look at part of my core position that's coming in from this section right here, which are the futures, as a means to finance the hedge that's indicated over here on this part of my screen. And so you'll hear me reiterate that, but essentially the hedge that I have on over here is being financed, at least to some degree, by part of my core position that I have on here. So that's important to note, important to highlight, but I just want to, again, show you that this is the main position that I started with at the end of last month. So it's the position, the way that I've positioned myself now against the index for the month of July. So once you've gone in and you dial all this in and you put all this in, more importantly, what that gives me, I'm just going to clear my screen here and scroll down. What that paints then is a picture of how my position is going to perform against the S&P 500. And so over here on the left, you have the S&P 500 and just how it's going to move solely based on percentage moves, right? So simple math, if the S&P 500 moves by some percentage higher, that's indicated right here where that's going to put the S&P futures in this case if we get that percentage move higher. Same thing to the downside, if we get some type of a percentage move lower inside of the S&P 500 futures here, it's indicated here where that's going to put the futures contract based on that move. More importantly, I have my position here, which is going to move lockstep with the S&P 500 indicated out to the really down the center here of my screen. And one of the most important columns is going to be this column right in here, which shows from the onset of your position. And then if you do go in and make any adjustments, this is how you can use this tool to manage your risk. But it's going to show you with your initial position or any adjustment that you make, whether your portfolio here or the position here is going to outperform the S&P 500 or underperform the S&P 500. And so by design, I have taken this position now against the S&P 500 for a number of months. And the main thing that I'm really going for here and that we teach you how to do is to put yourself in a position where you're going to maintain a market return to the upside as close as you can get to a market return to the upside. And that's to any degree higher to the upside, but also, and more importantly, just to manage and keep your risk in check, or to really optimize this. What we're also doing is putting ourselves in a position where to the downside, you'll see that we have this hedge that kicks in to a significant degree to the downside. But you'll see that I have this hedge kicking in here that if we do see some type of a significant move lower inside of the S&P 500, I have this hedge that's going to start improving my performance against the S&P 500 here. So I'll scroll back up here and just show you. So something that I just want to point out here is that the distribution of my risk and reward, and what I mean by that is just the way that my risk and reward is distributed here, all up and down this price chain. I won't look to change that for the entire month. So if I do nothing else over the course of this month, this is the position and really the outcome that I should expect against the price action that we're going to see over the course of this entire month. But as you'll see me do, I do make some adjustments depending on what we see on a week-to-week basis. I will come in and look to make some adjustments. And this past week, I did look to do that. So last week, we did start off with there was about a 1% drop on the S&P 500. And I used that pretty significant move lower, at least, for a one-day move. I used that as an opportunity to come in here and add an adjustment to my position. And that adjustment is indicated right here in this column. So I have that logged, and now what you'll see here is how that's ultimately improved my overall distribution of risk and reward. Again, it's not significantly changing the original position that I placed at the end of last month. It's just a small tweak to the position that's given me a chance to, at least in my opinion here, optimize the overall distribution of risk and reward that this position holds. So you'll see here now, especially from right here, where we closed was at 76.26. So right in here on the S&P 500. And so we have, and so we did see that significant move lower, only again to see the market rally off of that and snap almost back to new highs, as you can see here. So I'm happy with where this sits, at least for now. What I'm actually looking to do, as I did the past couple months, is if I did nothing else now for the course of this month, if I let everything play out, you'll see that I have improved my distribution of risk and reward to the upside here to just optimize this and bring it a little bit closer to a market return if we do see a continued rally inside of the S&P 500 from here. Obviously, it has put a little bit more pressure kind of right in this range right here. But what I'll look to do is actually, if we do see a few more days here where we rally inside of the S&P 500, I may go ahead and just take some profit on this adjustment and lock it in for this month. And that will then improve my overall distribution, my entire position, by however much of profit I pull out of that adjustment. So I'll be looking to do that over the course of this next week. If we do drop significantly into this next week, then I'll likely look to make some more adjustments to this in case we again later on this month get some kind of a snapback higher inside of the S&P 500. So I look at this part of my position as daring the market, to come and get me in this case. And because as it does, I'll continue to make adjustments that improve my upside here. And ultimately, if we do run into if it continues to take my dare, what I will do is we'll end up dropping into this zone where I have the more significant portion of my hedge kicking in and helping me improve my overall position against the S&P 500, at least coming in to help my position here to the downside. So that's what my position looks like after the price action that we saw on the S&P 500 this past week. We'll see kind of where things go, and I'll give you an update on that next week, along with an update on my position here inside of my portfolio. So again, I hope this is helpful. I hope you have a wonderful rest of your weekend, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.